Justin Tibbetts, financial advisor here with Jazz Wealth, and the question is, should you buy the SpaceX IPO? It is the number one question we're getting in all of our emails right now, and if your advisor is not talking about this, shame on them. They should be talking about it as well. We're talking to you from the Steward Live conference here in Fort Lauderdale, so we're going to dive in, and let's make sure you guys know what you're doing. First of all, this is going to be historic, right? This is a huge IPO. You've seen the news. You know what's going on here. There is an IPO with SpaceX that includes not only SpaceX as the rockets that we know, but AI, they call it Grok, but also has Starlink, which is the only profitable part of the business. We'll cover that here in a second. And there's a really interesting way that they're going about this with the way they're going to the retail public as well as to the investors and institutional investors as well. So we know that this is going to change a little bit, of course, and by the time you're seeing this, probably the numbers are a little bit different there, but they're raising $75 billion. Value is basically $2 trillion. That's the headline number that everybody talks about. And so instead of saying, well, should you invest in this? We said, well, let's go back and look. Let's look at all the big headline IPOs that are out there and see if there's anything that we can learn from that. All right, let's take a look. So when you look at the excitement of an IPO, especially like this one, this will be the biggest ever, right? You go, well, I want to know performance. All right, so if we look inside of this, the average IPO and what we're going to use and what we're going to call the average in this case is the big headline names, your Lyfts, your Ubers, Snapchat, Meta, Alphabet, all those big names that you remember going public, or at least if you're around, you remember going public. Now, the concept here is that things underperform. Right? You got to be very careful about that. I'm not saying it's a bad IPO and you can't invest for the long term, but let's take a look at some of the performance. If we look at Meta, and let's see. Yeah, you can see that perfectly there. So Meta itself, I remember this the day that it came out. They talked about it as if it was like a botched IPO, but damn, it turned out to be fine. But if you look inside of that time period, now what we're showing here is this is the IPO date, right? 4 months in, a year later, 3 years, 5 years, 10 years. You know what's going on. So we basically had a 50% loss inside of that initial window of the IPO. And a lot of it not a lot of it, but the action of that loss kind of happened really, really quick there. So careful on that one. Turned out to be okay. Remember Snapchat? We actually did a video. If you want to go back and look on our channel, old Dustin had a full head of hair and everything doing the Snapchat IPO. You can look on our channel, should you buy the Snapchat IPO? And we kind of gave it a little grief, right? Because as advisors here, we don't just buy stuff and then go play golf. We actually actively focus on our clients' investments, and it also underperformed in the beginning. Now, since then, it had a run, but since then, it's also underperforming as well. So careful with that. Now, Uber and Lyft, if you remember, I think it was within a week or two that they both went public, and it's probably going to be the same. By the way, a little side topic here, probably going to be the same with Anthropic and ChatGPT or OpenAI, right? They're both probably going to go public really, really close, and they both basically do the same thing. One is enterprise, one is consumer. I get it, but all right, so careful. Well, Uber and Lyft were the ones that, don't hold me to this, but they were very, very close in terms of going public. Also underperformed, right? Now, Uber ultimately was the successful winner of that, as you can see here, looking out 3 years and 5 years, right? Uber far outpaces, what Lyft did. But again, you were more, the benefit was to wait, right? Instead of chasing the hype of the IPO. So very, very careful there. I had to put this one in there. I know you guys are going to tease me a little bit, but when I do videos and we're talking about the markets, I always tease what they call the great tulip phase, right? Or great tulip craze, I should say, where things are exciting and everybody chases it. I use 3D printing stocks. We talk about marijuana stocks, the Beyond Meat stocks, right? The fake meat is what I always talk about there as one of the great tulip crazes. If you're not a stock market historian, look up the great tulip craze. That was the first parabolic move in the market. Well, anyways, remember when that came out? Old Kramer on TV, he was excited about the meat. I tried it. It was okay. It wasn't for me. But okay, same thing, right? In the very, very beginning, that one was exciting. That would be one of the examples I can give you where, you would have been of great success if you would have been a part of that in the beginning. However, look what happened. It faded away. This is the one that I can share with you and say, all right, well, look, if you were a part of it in the beginning, it was great, all that good stuff. So what we started doing is we put together some of the IPOs that came out in various time periods, right? So your Airbnbs, Robinhood, Coinbase, DoorDash, Rivian, things like that. The point of the story is, as you look through, and you guys are welcome to these slides if you want, but as you look through, the longer term won the game, right? And the longer term won the game if you didn't, it really won if you didn't participate in the very beginning. So the moral of this kind of story is, in the very beginning, with all the hype and everything, you didn't really miss out on anything. This IPO is priced to perfection, right? And, what are you doing? You're not getting a deal. Anything else in life, you want a deal, right? You're not getting a deal on this one. This, in our opinion, how we've kind of put things together, this is priced to perfection. There will be some volatility in the beginning. Hold tight. Maybe it's not the time to be a part of this IPO. I can't tell you what to do, but looking back at all the other stats and the data that we have, well, we got to use that, right? We don't have anything else to go on. So, and keep in mind that I'm a Starlink user, by the way. I love Starlink myself, but all the other parts of the business aren't technically profitable yet. So it's a little bit of an uphill battle for what they've got to go on. I'm not saying that down the road they won't be worth 3 trillion, 5 trillion, whatever, but look at the market. You have all this hype where people are selling other assets, your Dells and Broadcoms and things that have done really well. They're selling all of that to go to what? Oh, the IPO. I'd like to be a part of that. Careful when you chase the hype. So hopefully this was a lesson of chasing the hype. What went well? Well, Beyond Meat was the only one that went really well. All the other ones, it was more beneficial to sit back and wait, let the dust settle a little bit, and go for that. If your advisor's not telling you this, well, I hope you'll check us out at jazzwealth.com. We work with all clients all over the world and all sizes. We're not one of those that says you got to have $1 million to work with us. No. Hope you enjoy. Thank you so much for watching. We'll see you next Monday on The Closing Beat. Coming back. So excited about that. You guys enjoy.